whatever happens in the near term, volatility, noise, don't let it scare you. Don't let it panic you. Don't let it shake you out. And I'm not saying someday, 5 years from now, we'll all be happy that I said this. I'm saying that by the end of this year, I'll either be right or I'll be wrong. I think I'll be right, and it's my intention to use any volatility in the near term to buy, and that would be gold, silver, uranium, nothing else right now. If gold breaks out, I don't think it just goes marginally higher. I think we are dealing with a moment where people realize that they need a safe haven like that, or they need to protect themselves against a vanishing dollar, and that takes gold to a much higher level.
Lobo Tiggre, the founder and CEO of Lewis James LLC, recently made an appearance on Liberty and Finance to discuss the dangers of inflation and the significance of investing in precious metals. In a recent interview, Tiggre reiterated his bullish outlook on gold, silver, and uranium, and said that he believes these metals are the only safe haven assets in a world that is increasingly unstable. Tiggre believes that the global economy is headed for a period of high inflation, which will erode the value of paper currencies and make gold, silver, and uranium more attractive investments. He also believes that the current geopolitical landscape is increasingly unstable, which is another reason to invest in precious metals. Regarding the real interest rates, Lobo Tiggre believes that they are likely to remain low, and they may even turn negative again if inflation rises and the Federal Reserve pauses its actions. He acknowledges that the interest rate situation is complex, but maintains that he expects inflation to remain high. Tiggre highlights that real interest rates are important because they determine the return on investment. When real interest rates are low, it means that the return on investment is also low. This can make it difficult for investors to find attractive investment opportunities. However, when real interest rates are negative, it means that investors can actually earn a return by holding cash. This can lead to a flight to safety, as investors move their money into assets that are seen as less risky, such as gold and silver. We will now bring you clips from Lobo Tiggre's interview with Liberty and Finance. But wait, there's more. To stay updated with all our future uploads, make sure to hit that subscribe button and turn on post notifications. Thank you, and enjoy the video.
I do think that gold and silver will do well in this recession. I think a recession at a time of still high inflation is going to remind people of the 70s. Now, it's very different from the 70s. Things don't have to happen now as they did because of the 70s. But when people are grasping for what to do, and they're asking the same question you just asked me, they're going to look around and say, well, what happened last time? Or when were we in similar circumstances? And so you could see, never mind the fundamentals, you could see just a self-fulfilling prophecy push gold and silver much higher in this environment. If nothing else is working, then even the much hated pet rock could actually end up sparkling again. But I actually think the fundamentals are on our side here too. I think real rates are still going to remain low. They may actually go negative again if inflation pops up and the Fed pauses. And I think, well, the whole interest rate thing is another question. But I do think the inflation will remain high. And I think that environment is very constructive, as the mainstream analysts say, for what they're bullish on. The people who think that the banking crisis you and I spoke about the last time we were on air together, people think, oh, that's it. It's safe to get back in the water. The Fed broke something and it wasn't so bad. Hey, happy days again. I don't think that's it at all. I don't think you go from basically nothing to raising 500 basis points at a record rate without a lot more going off. Just for one example that I'm not the only one mentioning is commercial real estate. So I think more things are going to break, and I think the Fed will pivot, not because it's beaten inflation, but because systemic risk rears its head. You know, they're not going to admit, oh, it's just because of recession. They're going to say, oh, well, there's systemic risk here, so we can't afford to let this go. But that means, if I'm right, you know, I don't know the future, but if I'm right, that means rates will go down, real and nominal, and that's fundamentally still a very strong positive correlation for gold. I'm very bullish. I've said it's been a bit controversial because, you know, my gold button friends get mad at me, but I'm more confident of higher uranium prices this year than I am gold. But I think, you know, to assuage my gold bug friends, I think if gold breaks out, it doesn't just go higher. Like uranium can go higher to 60 or 70 bucks, and that would be plenty to incent new supply to come online. I'm just saying, if it really breaks out, I could see gold delivering much bigger gains for speculators in the stocks than uranium. But absent a Chernobyl type event, I just see uranium as extremely solid. This has to happen, and we can see it happening now. This isn't just a someday, somewhen. Our famous Rick Rule quote: "Forget about the inevitable. Don't confuse it with imminent." And my add-on to that is, I don't even care about imminent. I want it happening now. This is something that's happening now. Uranium is having a great year. Near-term chaotic. I would expect, based on the economic data, for the near term to provide buying opportunities in gold. And I am surprised, but pleased to see that gold has held up better than I expected in these circumstances. And if anything, I don't want to give you more clickbait headlines here, Elijah, but if anything, that makes me even more bullish for when the other shoe drops on the economy. If we have this much of a bid now, imagine what happens. Imagine what happens when the fundamentals turn bullish again.
During the interview, Tiggre also highlighted the current challenges that gold is facing. He pointed out that one of these challenges is the reversal in the value of the dollar, which had previously benefited gold earlier in the year. He also discussed the possibility that central banks might take measures to stimulate the economy, such as lowering interest rates or injecting additional money into the market. These measures could lead to a decrease in demand for gold, as investors would be more likely to invest in assets that offer a higher return, such as stocks or bonds. However, gold prices have actually remained relatively steady at around $2,000. Tiggre attributed this to the fact that investors are still seeing gold as a safe haven asset, despite the possibility of central bank intervention. Additionally, inflation is a major concern for many investors, and gold is seen as a good way to protect against inflation. Let's get back to the interview.
I've been scratching my head a little bit on this. We're always wondering, what's the perfect equation? How can we best predict the price of gold? Anyone who could crack that nut can make billions. I don't think there is any such equation. And the conventional wisdom hasn't been, just look at real rates. That's all that matters. Clearly there are times when it doesn't matter. There's moments of extreme political uncertainty. Wars can make gold move regardless of what's happening with interest rates and so on. But real interest rates have been credited with being the most explanatory variable over the decades since the dollar became a floating abstraction in 1971. And in the past, that correlation was there, but it's been, conventional wisdom so long that, frankly, mea culpa, I never went back and checked on it for a long time. And when I did, I found that the relationship is really broke down. And in fact, nominal rates have a higher correlation with the gold dollar exchange ratio now than real rates. And maybe with all these experiments with negative interest rates the governments around the world have been experimenting with, and all the crazy stuff done since 2008, maybe that's no big surprise. We've been in financially uncharted waters. So when it looks like we've got headwinds, the reversal in the dollar that you and I spoke of late last year, that played out more or less the way I thought it would, and it was very good for gold earlier this year. But that's kind of fallen apart now. And with the EU posting not just much lower than expected inflation numbers, they're also posting other signs of economic weakness that could have them ease up, and therefore the relative hawkishness of central banks balance changes, right? So there's headwinds for gold right now. Not other things being equal. If I just look at the headlines, if I look at the economic data, I'm actually short-term bearish on gold. I'm not bearish on gold, but like over the immediate month ahead or two, until the brown stuff hits the fan again. The data don't really look supportive for higher gold prices. And yet here we go. We're still back around 2,000 as you and I speak. There's no real news today, but it's up. While the markets have been fluctuating up and down in the red. The big news on the markets right now is Apple and their very expensive VR headset. That's got nothing to do with gold. So who's buying? It's an easy answer to say central banks. But we don't know that, and we won't know that until later. And even when we think we know that, when the World Gold Council tells us, record central bank buying. Well, how do they know? Well, they know because they go with the IMF reports. Well, how does the IMF know? Well, they call Russia and China and say, well, what did you buy? And you believe those guys? I don't. So who knows what the actual central bank gold buying is.
The Federal Reserve is unlikely to raise interest rates anytime soon, as it is concerned about the impact that higher rates would have on the economy. The economy is still recovering from the COVID-19 pandemic, and higher interest rates could slow down the recovery. Additionally, inflation is likely to remain high in the near future as the economy continues to reopen. This combination of low interest rates and high inflation is likely to support gold and silver prices in the coming months and years. What do you think about Lobo Tigre's outlook on gold, silver, and uranium? Please share your comments and observations in the comments section below. Additionally, if you found this video informative, don't forget to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.